As an investment enthusiast, one question I frequently receive is, between crypto and stocks, which one is the best investment? This topic sparks intense debates among investors seeking to optimize their portfolios. In this video, we will compare these two financial worlds, stocks and cryptocurrencies, by examining their advantages and disadvantages. We'll explore the different factors like volatility, accessibility, and long-term potential to empower new investors with the knowledge to enter into markets and to start making profits. Crypto and stocks are fundamentally different investment assets. A stock exchange trades in company stocks or shares, while a cryptocurrency exchange trades in digital currencies. To elaborate, when you invest in stocks, you become a shareholder in a real company, and you can access detailed financial information about the company's operations, projects, expenditures, and expected profits. Its value fluctuates based on the company's performance. On the other hand, with crypto, you are essentially buying into a digital asset, a piece of code that can be created, and its value is determined by the demand and supply dynamics in the market. Factor 1 is volatility. We'll now compare the two in terms of their volatility, or in simpler terms, the roller coaster-like journey they offer to investors. The origins of the stock market can be traced back to 1611, when the Dutch East India Company became the first publicly traded stock. Over the centuries, experts have gained insights into spotting and predicting market trends, although accurately timing the market remains challenging. While time in the market is generally considered better than timing the market, some skilled individuals have managed to outperform the market. The level of volatility varies based on the investment approach. Day traders and those investing in penny stocks typically experience higher volatility compared to those who hold low-cost index funds. Indeed, the stock market offers something for everyone, accommodating individual risk tolerance and financial goals. Some may find the excitement of high volatility investments appealing, while others prefer the steady and reliable path of index funds to achieve their objectives. Cryptocurrency's origin can be traced back to the aftermath of the 2008 financial crisis, making it a relatively new player in the financial landscape. Due to its limited historical data, price movements in the crypto space are highly unpredictable. While future data accumulation may improve trend prediction, for now it remains a realm of uncertainty, and speculation can be as good as anyone's guess. One prominent issue in the crypto market is pump and pump schemes, where scammers inflate the price of a particular coin through deceptive advertising and then swiftly sell it at the peak, causing the value to plummet. This wicked practice is facilitated by two factors. First, the ease of creating new coins with minimal oversight or regulation, and like stocks, opens the doors to both innovative projects and potential scams. Second, the relatively small market cap of many cryptocurrencies makes them susceptible to manipulation through aggressive marketing tactics. Undoubtedly, the crypto space is significantly more volatile than stocks. However, careful and well-informed investment choices can present profitable opportunities. While there are risks, investors who research and observe credibility can leverage this volatility to their advantage and potentially achieve substantial returns. Factor 2 is ease of access. Ease of access for beginners is an important aspect of any investment journey. If the process is too complex or inaccessible, many individuals may be discouraged from getting involved. Historically, the stock market was notoriously difficult to enter, mainly benefiting the wealthy. As someone who didn't come from any affluent background, you had to navigate the challenges of finding a stockbroker to handle your trades through cumbersome phone calls. Cryptocurrency faced its own set of challenges in the early days. Many people lament not having invested in Bitcoin during its starting, but the lack of user-friendly platforms made it nearly impossible to purchase. However, in recent times, this has changed for the better. Thankfully, the landscape has evolved, and access to both stocks and cryptocurrencies has become more straightforward. Major platforms like Coinbase have gone public and now provide an efficient and secure way to buy cryptocurrencies. The recent IPO of Coinbase marked a significant step in legitimizing the entire cryptocurrency industry. It is incredibly user-friendly, allowing you to purchase crypto and conveniently transfer it to your private wallet. This increased accessibility predicts well for both novice and seasoned investors alike, making it easier for more people to participate in these markets. When considering investments, it is important to always focus on the long-term potential. Stock market experts frequently advocate for holding stocks over the long haul, as history has shown that the US stock market as a whole tends to increase in value over time. Staying invested in a stock fund for like 10 years can lead to significant growth, where missing the best trading days results in substantially lower returns. This illustrates that although the stock market may experience short-term dips and fluctuations, it has historically displayed resilience and the ability to recover over extended periods. When discussing long-term investing, it refers to a time horizon of 10 years or more, while medium-term investment ranges from 3 to 5 years, and short-term can be as brief as 1 day. Think of the approach to investments as paying a regular bill. Each month, you contribute to your investments and then completely forget about them. This strategy helps in steering clear from emotional decision-making and avoid missing out on the best trading opportunities. However, when it comes to cryptocurrency, the long-term potential is less certain. The relative infancy of crypto market and the lack of historical data make predicting its long-term trajectory more challenging. As a result, careful consideration and risk assessment are crucial when investing in cryptocurrencies. The future of cryptocurrency relies on mainstream acceptance, which is gradually occurring. Cryptocurrencies offer various advantages, and Bitcoin in particular is often seen as a store of value similar to gold. Its limited supply of 21 million coins implies that as more Bitcoin is purchased and less is sold, the supply decreases while demand increases, potentially driving up its price. Ethereum, the second largest cryptocurrency, aims to establish a global computing platform that allows decentralized app launches, free from single company control. It uses smart contracts to execute terms without intermediaries, disrupting various industries and envisioning a future with cost-saving transactions, without the need for traditional intermediaries like lawyers and real estate agents. While the concept of cryptocurrency may sound complex, their potential to revolutionize traditional systems is convincing. As the world moves towards digitalization in various aspects, the shift to digital currencies seems logical. Many investors are concerned about the excessive money printing by politicians without considering the long-term implications, which could lead to inflation. The current state of cryptocurrencies is speculative, but if Bitcoin and Ethereum can fulfill their objectives, the long-term investors may see significant returns. However, it's essential to recognize that there are numerous other crypto competing in the market, and the success of specific cryptocurrencies remain uncertain. The growing interest in cryptocurrency among young investors and the focus on the stock market by older investors highlight the contrasting preferences between the generations. When comparing stocks and cryptocurrencies, each has its own merits and drawbacks. When making a choice, many investors prefer leaning towards stocks. However, the beauty of it lies in the freedom for making an exclusive choice. A valuable piece of advice is to allocate at least 5% of your portfolio to crypto investments. Diversifying across various asset classes may expose you to slightly higher risk, but it also opens up the potential for explosive returns. It doesn't have to be an either-or dilemma. Investing in both stocks and crypto can be a viable strategy. The level of risk you're comfortable with depends on your investment timeline and your financial goals. By considering these factors, you can create a well-informed path towards achieving your investment objectives. Let us know your thoughts in the comment section below. If you're asked to choose between stocks and crypto, give it a thumbs up if you find this video helpful and subscribe to the channel for more financial content. Thank you for watching and stay financially woke.